How'd the doctor go?
Dude, they thought I had post-acute COVID last week. Now they're like, you got something rheumatological like lupus. I'm like, oh, okay, great. They can't figure out what's going on.
What's happening, everybody? It's your boy, Chicago Sean McLaughlin. I'm the Chief Option Strategist at All Star Charts. I'm joined today by Steve Strazza, filling in for JC, the tardy JC, who played hooky at the last second, and thankfully Strazza stepped in. What's up, Steve?
I'm always happy to hang out. You always have me on.
I know you are. You know, I had a buddy growing up named Steve, and we used to call him Standby Stevie, because whenever you needed somebody to hang out with or somebody to go with you somewhere or do something, he was always willing to go. Standby Stevie. So I might start calling you that too.
I like that. I'm the Standby Steve of All Star Charts. So, that works.
I love it. I love it. All right. So this is the options trade of the week, where we go through a options trade that we put out today. We have a blog post that's out. You can find it on my Twitter stream, but we're going to dive into it a little bit more deeply here. Maybe dive into how and why we got into this trade to begin with. And it starts, Strazza, you and I talked about this yesterday on Twitter.
Yeah.
We were noticing that there had been some unusual options activity in Pinterest. There has been an activist buyer building a position in Pinterest, and most recently a CEO of Pinterest added a whole bunch of shares. We're not fundamental guys, but hey, when all those stars align with a good technical setup, well, what's not to like?
Listen, the insider interest in this name has stood out more than any name. You know, we track it on a daily basis, all the insider activity in across the board. And Pinterest wasn't hit just once in the past month or so, but twice, right? So we had a hedge fund activist, Elliott Management, that's Paul Singer's fund, some of the best on Wall Street, particularly when it comes to being active in tech stocks. We were just talking, they're also in PayPal right now. So they're getting their hands a little dirty on this sell-off this year. Pinterest, they own 9%. They're now the largest shareholder. Then on the heels of that, about 1 week later, as soon as earnings were out of the way, you see the nice little gap up higher we had on earnings last week. The CEO came out as soon as that blackout period ended for earnings and bought shares in the open market right following the earnings gap up right here where we're trading right now. So CEO likes it. Paul Singer and Elliott Management like it. And hey, technicians should like it too, because from a structural or from a technical standpoint, you know, this is a bearish to bullish reversal pattern that's kind of playing out here. We resolved higher, and now I think it's in the bull's court.
Yeah, why don't you pull up that zoomed in chart, because we have noticed that it definitely is displaying characteristics of a strong bid underneath the shares of the stock that you know, can point to the fact that there's probably a big buyer here trying to quietly scoop up shares.
Yep. So Elliott was accumulating down here, and stock gapped higher last week on earnings. CEO purchased it up here, $5 million worth. But look at how high and tight this has been all week, right? Since that earnings gap, it hasn't really given any back. Hasn't even tested the lows from the earnings reaction day. So to me, that it feels like maybe somebody's in here supporting it. It would make a lot of sense to see this kind of action if we find out next week that Elliott has built an even bigger position. So I wouldn't be at all surprised to see something like that.
Right. So technically, all by itself, we like the setup. And then the fact we got these other incidental things going on behind the scenes just gives us a little bit more confidence, a little bit more eagerness to get involved in this trade. So from an options trading perspective, to put on a trade where we can define our risk, you know, one thing I observed, and unfortunately I don't have a chart for you, but the implied volatility that's priced into the options is a little bit higher than I would like to just, you know, if I wanted to just buy straight calls, I think I'd be paying a little bit too much for them. Doesn't mean we couldn't win that way, but I was a little uncomfortable paying that much. So what we decided to do is we decided to buy a bull call spread where we bought the November 25 calls and we sold the November 35 calls against it. And all in, we paid about $2. Actually, we paid a little bit less than $2. I think we got like $1.98 was our average price there. And here's the P&L graph you can see here. The most we can lose if we're wrong is that debit we paid right up front, right? So $2 is the most you can lose per one lot. The most we can win is $8, right? Our gains are capped up to $35 a share, which, hey, if this thing gets moving, we think it could move up a little bit past 35, maybe 36, $37. But as always with bull call spreads, I'm not going to try to hold this position all the way until November expiration to squeeze out that every last nickel of that potential win. I'm going to look to take profits when I can get out of the spread for $6. So I paid, let's say I paid 2 for it today. I'm going to look to sell it for 6, which would be a tripling of my invested capital, which is pretty nice. But more to the point, we're getting out when we've captured half of the maximum possible gain in the trade without having to hold the risk all the way in November. I mean, a lot could happen between now and November, as you know.
But like you're saying, in this type of a market, we were talking about it earlier, these bases are still kind of forming, could take some time. If you get a strong leg higher here and a move back towards that 200-day in the upper 20s, you're saying probably hoping to exit then, not trying to hold this to 36.
Right. I mean, my feel is that if this thing starts moving, it's probably going to move quick. And we should be able to get out of this spread relatively quickly. And then, let's say I'm up. Let's say the spread is worth $6 after we've been in this trade for a couple of weeks. Do I really want to hold for another 4 months to squeeze out another $1 or $2? No, I don't. So that's why we take the profits early and move on. And
where are we out? We like this 22 level?
Yes. I'm being a little bit more generous. I'm using 21 just so, we don't get caught in a little bit of noise there. I feel like there might be a little, it'd be very easy for traders to want to try to do a little fake out breakdown into that gap. So I split the difference on the gap and I'm using 21 as my level. So any close below 21, that's where I consider myself wrong, and I'll close the trade.
So, that means that gives us some nice flexibility here, a little nice margin of safety. If we get some backing and filling, like you said, fill that earnings gap, move back towards this resistance, this trend line here, when we broke out from this wedge, you really get some backing and filling down towards close to 20. And this breakout could still be intact. I think that's
Yep. I might be a little too aggressive with my stop loss in that scenario, but hey, I'd rather err on the side of being extra cautious when I'm managing risk. You know what I mean?
Totally. Another thing here, the bullish momentum. Momentum hasn't been oversold in this name since like January. Another nice thing we're looking for. You can see that better here. But yeah, this is it. These are the charts that we like right now. Nice base. We're above here, looking for a leg higher.
Yeah, we're seeing so many of them. All right, so just to reiterate, our trade is we bought November options, a November bull call spread. We bought the November 25 calls and we sold the November 35 calls, an equal amount of both. We paid approximately $2 to get in. We're trying to get out at 6 to book the profit, or we're cutting the trade out if pins closes below 21. That's all we got. Straz, thanks for helping out with this trade. Thanks for helping out with this video last second. I appreciate you, Standby Stevie.
I like this one a lot. I'm a big fan of this.
All right, take care, everybody. We'll see you next time.
Bye, guys.